Good afternoon, ladies and gentlemen. Thanks for making time to join us for the 2021 Virtual Accra SDGs Investment Fair. Over the next 3 days, we're going to understand how we can cascade private sector investments to ensure that we accelerate Ghana's achievements towards the 2030 Sustainable Development Goals. But I'm excited this afternoon to be hosting 2 professionals in their own right on this panel. And this happens to be session 2 of today's discussions. This is day 1 on 24th of August 2021. We're going to delve into the topic, Building Back Better through the Ghana Cares Obaatan program, drawing synergies with the private sector towards the implementation of the Ghana Cares Obaatan program. For those of you that do not know, maybe a bit of background to what this whole Ghana Cares program is about. So the Ghana Coronavirus Alleviation and Revitalization of Enterprises Support Cares Obaatan program was launched by the government of Ghana in November 2020. And it's supposed to be, I guess, our response for recovery and revitalization to ensure the socioeconomic transformation and modernization of Ghana's economy. Under the Ghana Cares program, we are hopeful that we can support commercial farming and attract educated youth into commercial farming, as well build Ghana's light manufacturing sector, and develop engineering and machine tools and ICT digital economy, fast-track digitalization, as well focus on housing and construction, push Ghana's regionalization hub, and optimize ongoing government flagship programs. So this is our government's medium-term plan to recover from the ramifications of the COVID-19 pandemic. Again, as I indicated earlier, I'm super excited to be coordinating or moderating this session with a panel of 2. And if I can have maybe a minute to introduce the panel we have at the moment. We have Ms. Eva Esalba-Mens. She is an alumnus of the University of Ghana, Legon, where she studied political science with economics. She has an executive master's in public administration from GIMPA and has undertaking numerous courses from Harvard and Duke universities. I should state that she is a public financial management expert with close to 30 years experience at the Ministry of Finance. Ms. Mens, you're welcome to the SDG Investment Fair.
Thank you very much, Fifi. It's a pleasure to be here.
Great, thanks so much. So I'm going to introduce the second panel. He is by the name Mr. Ebenezer Arthur, and he is the founder and CEO of Wangara Green Ventures, an impact investment company in Ghana with capital funding from the World Bank. So Wangara has the objective of catalyzing the growth of green economy in Africa, starting from Ghana. I should state again that he is the co-founder of InnoHub, a business accelerator here in Ghana, and he previously worked with Ernst & Young. He has an MBA and a certificate in climate change financial risk and opportunity from Imperial College in London, and is also an alumnus of Oxford Impact Investment Program and an Aspen Ideas Fellow. Mr. Arthur, welcome to the Accra SDGs Investment Fair.
Thank you very much, Emmanuel, and hello to all our participants.
Great, wonderful. So as I indicated earlier, we're going to delve into a topic that is dear, I guess, to the heart of many people, to understand how we can recover from the COVID-19 pandemic with the help of the private sector. And so we're going to delve into the topic, building back better through the Ghana Cares Obaatan program, drawing synergies with private sector initiatives towards the implementation of the Ghana Cares program. So if I may start with you, Ms. Benz, what do we, in a nutshell, seek to achieve under the 100 billion Ghana cedi Ghana Cares Obaatan program? And if I may ask, how is this recovery program aligned with existing developmental programs such as the Ghana Beyond Aid program and the President's Coordinated Program of Social and Economic Policies? Essentially, what do we seek to achieve with the CARES program?
Thank you very much, Fifi, for the opportunity. Last year, as we all know, the world was hit by this pandemic, and the measures to address it and ensure that we protect lives and livelihoods meant that there were lockdowns, and what it meant was that there was literally a global shutdown. So value chains were disrupted, and unfortunately for us, we are quite dependent on imports. And so that meant that we had a reduced inflow of critical imports. These included medicines and food. So in putting together a team as directed by the president to look at how to address the impact of COVID on our health and just our socioeconomic environment, it became imperative to look at our dependence on imports for the very basic things that we require. So one of the first things that we sought to do is to address that issue. How do we ensure that we can be self-sustaining in our basic requirements, food, medication, and what we require to sustain ourselves in case of anything like this, or even for our own survival. So part of the effort in ensuring that we not only survive the pandemic, but we recover quickly was the result of what we now call the Ghana Cares Obaatan program. It was launched in November 2020, and what went into that included engaging both private sector and employees and organized labor, all the various stakeholders, including public sector practitioners, to come up with a response. And this response, as I said, is what we call Ghana Cares, and we actually want to refer to it as Obaatan. Obaatan meaning motherhood, because this is supposed to care for not just people who have been affected, not just the economy, but overall as a nation, how we address our basic human needs. So essentially, the Ghana Cares is to ensure that we as a nation can be able to sustain ourselves. So the major focus is trying to increase our food production in the critical food areas that we need. So we are looking at rice. Our demand for rice is quite high. We import significant amount of rice into this country, and we are producing less than 50% of what we require. Same with tomatoes. It's interesting. The tomato story is so interesting. As a country, per capita, we consume more tomatoes than any other country in the world, maybe Italy. But it's such a major component of our basic diet. Interestingly, what we even produce, we produce less than 50%. And what we produce is actually, we lose about 50% of it. So we selected tomatoes. We also selected poultry, because again, we import significant amounts of poultry. So overall, we chose to focus on about 5 different products that were importing, using about $2 billion to import. In a country where we have over 1.6 million unemployed youth and have arable land, it just doesn't make any economic sense to use our limited foreign exchange to import food items that can be produced locally by young people. So the focus, one of the focus of Ghana Cares is to match our unemployed youth, especially those who are educated, to the potential that exists, the opportunities that exist, so that they can take advantage of the system and meet the demand. What it will also do is to save us all the foreign exchange that we used to import, create jobs for our youth, and also create food sufficiency for us. The other area of Ghana Cares is to look at light manufacturing. I mean, almost every value addition that is, we have value that has been added to simple fruit juices we import. So how do we make sure that we can add value? Because there's also the issue of we having high post-harvest losses. Even with tomatoes, even what we produce, 50% of it we lose. So how do we make sure that we put in place a system that would add value? So we're looking at agribusiness. Then basic equipment for adding value, light manufacturing. Why should we even bring the simplest tools that we need to manufacture the simplest things, simple mechanics by the roadside? Who can fix your tire? The bolts that he needs has to be imported. We don't think that we need to depend on the global market for things that can be produced here. So one of the areas that we're looking at again has to do with line manufacturing. What can we manufacture locally? The other area that we want to do is digitization. I mean, everywhere, if we were ever reminded of the need to digitalize public services, it was through this COVID. I mean, we were shut down, everyone had to stay at home, and yet work had to go on. So we had to rely heavily on ICT tools. But a lot of our people are not educated. If you go to our colleges, very few graduates are coming out of our universities with any ICT. So we want to fast track not just our public service digitalization, but also ensure that our populace, our ordinary citizens, have the basic ICT tools, ICT skills. And so we want to support university, support the populace in acquiring these skills. So we want to build tech hubs where skills will be provided and opportunities created for our people to tap into the $1 billion is even an understatement, right? $1 trillion opportunity in the ITC sector. So essentially, those are the key things. But let me quickly go on to how they are related to SDGs. I talked about agriculture. I mean, how can we not be able to feed ourselves in this part of the world when countries where it snows half of the year can grow food and store enough and be self-sufficient? We have no reason to be importing food, and also our people to go hungry. So yes, we believe that increased production will also improve our food security and food sufficiency, and that addresses SDG goal 1 and goal 2, poverty. Poverty, half of our population are in agriculture. Increased productivity means that there are increased incomes and improved livelihoods. Just yesterday, we had a discussion, and apparently, whereas even in Cote d'Ivoire and Senegal and Burkina Faso, they have about 54 kilos of yield per hectare on tomatoes. In Ghana, we are doing about 5 kilos. So there are fundamental issues. If a farmer decides to crop a hectare of tomatoes, the farmer in Cote d'Ivoire, the farmer in Burkina Faso will earn 10 times more than our farmer here. So when we address the issue of productivity, we address the fundamental issues of agric. we believe that we'll have improved incomes. And of course, Ghana Cares is aligned to Ghana Beyond Aid and the President's coordinated program because it's an arm, or can I say a leg, one of the legs of the Ghana Beyond Aid. I think I'll stop here and then give opportunity to others, and I'll come back. Thank you very much.
Thank you so much, Ms. Mens. It's pretty clear. So agricultural modernization, increasing productivity in agriculture to make sure that we institute some good food import substitution measures to ensure that we're self-sustainable in agriculture. I heard you also make mention of light manufacturing and digitalization, setting up tech hubs. I'm sure that will be very exciting for the young people in this country. But if I may move on to Mr. Arthur, I'm pretty sure you've perused the Ghana Cares document, and I just want to find out from you. So where lies the opportunities for the private sector? I guess from a private sector perspective, have you identified any quick wins that you can tap into? And maybe to chime in as well, what will be your proposed, I guess, implementation pathway from a private sector perspective? Mr. Arthur.
Thank you very much, Emmanuel, and thank you so much, Ms. Mens, for sharing that. I was happy when I heard you mention the food production and then the digitalization. We in the private sector, I think these are the things that we want to see. And just to practicalize it, if you take the issue about the food production and import substitution, for example, that Ms. Mens was talking about, my company has invested in a poultry feed company. And this is basically following up on how the poultry industry needs to grow. And for it to grow, we need to start producing our own feed. We have a few poultry feed companies, but you would realize we need much more. Even if our smallholder poultry farmers are to improve their yield and their overall livelihoods. Climate change is increasing temperature, yields are going down. So these are very important. Same with the rice. I would say that CARES is very, very essential following COVID. And yes, we talk about green economic recovery, but I would like to say, let's look at it from a green recovery, right? Even in the West, they are talking about the Green New Deal. And in Europe, they are really talking about the green recovery there. And this is essential because beyond COVID, if you take Ghana and the world in general, there's climate change and there's the net zero transition. So if we are going to reconstruct our economy, we need to make sure we are building an economy that is modern, that we don't have to go back and have to redesign 10 years down the line. We need to look at it from the context of the continental free trade. We need to look at it from our own ambitions around Ghana Beyond Aid. And these are very aligned to the SDGs, as Ms. Mens said, because take Ghana, the WEF recently came with a document that shows that Ghana needs to get $431 billion in the next 10 years to meet the SDGs, right? This is about 43 billion for just 2021. And it is programs like CARES or Obaatan that can help us think in a very, if I'll say, progressive and constructive way to get access to some of these funding. I think that in looking at CARES, and I'm addressing your question in terms of the approach, we need to look at the Ghana CARES program beyond the policy side of it. We need to look at it from the practitioner side of it. And we need to ask the question of how are we going to fund it? And in how we fund it, we need to be very innovative and look beyond the traditional sources of funding, which are the development partners or donor programs, and then the capital markets we've been going to, that's a traditional capital markets. I think we should look to what I call whaling capital. What I mean by whaling capital is there is a growing allocation of capital in the impact investing and responsible or social finance world out there. That is aligned very much to our ambitions around CARES and the SDGs. And these also come at, if I would say, more flexible and concessionary rates. And so in looking at CARES, we need to have a strategy in terms of how we access those kind of funds. Key within that is the climate finance. There's been commitment of about 100 billion from developed countries that from the Paris Agreement, they are required to kind of support our own transition. So these funding have been allocated. We need to be looking at how CARES is going to tap into these climate finance out there. There's the Global and Environment Facilities, there's the Global Climate Funds, and a whole lot of other pools of capital out there. I will propose a three-step way in which we look at this and involve the private sector. I think we need to start with, first and foremost, engaging various local capital providers. These are the banks, the non-bank financial institutions, and the private equity and VC funds, to work with them and build what we call a consolidated pipeline of investable opportunities. I think we need to move from the idea of the program to what projects or businesses the money will go into. And these projects are sitting with these local capital providers. Some of them have these on their desk, on their table, and they don't have the capital to fund it yet. Some of them have the capital, but it is not the right capital for those kind of projects. And so we can use this to build that kind of viable pipeline. And one tool, a quick win we can use for this is the SDG Investor Map that was recently launched by the GIPC and UNDP. Right. We have that. We don't have a lot of projects in there, but if we can work hand in hand with local capital providers, then we could see the projects in there increasing to show that there are real and tangible investment opportunities on ground. Now, the second step would be to align these opportunities to the CARES program. Not all of them will fit, but we could find out which ones fit and make some room for some adjustment to the CARES program to suit the kind of deals that we are seeing coming from the ground, because they may be telling us something else that we may have missed from a policy perspective. And that would require bringing in entrepreneur service organizations to help the promoters of these projects to, one, get investment ready, two, make sure their impact and SDG alignment is right, three, have some climate action plan to qualify for the climate finance out there, and three, have digitalization roadmaps. And that's why I was so happy when Madam Mens mentioned the digitalization. The last leg of this approach, that's the third, is once we have these projects and we've identified the support for them, we can then have this kind of collective engagement with the impact investment asset managers, as well as the climate finance vehicles like GEF and GCF, to source the right capital, whether it's through our green bonds or through any other funding instruments that we would use, and channel these through organizations like the Ghana Infrastructure Fund, Investment Fund, VCTF, and last but not the least, the new kid on the block, that is a DBG. They can then deploy channel the capital to the local capital providers who originally gave us the deals, and then they can invest in these. And I think that would help us go a very long way in practicalizing this and implementing it effectively. Thank you.
Great. Mr. Arthur, thanks. These are very insightful submissions you've made right there. Linkages between after climate change and how I guess we can cascade financing towards the SDGs using the climate finance architecture. These are wonderful. And the 3 points, I guess, agenda you just labeled: engaging local capital providers, aligning the Ghana Cares program with the SDGs, and then identifying impact investment vehicles that we can channel, I guess, these funds through. Thanks so much. These are great submissions, and I'm hoping that our audience are taking cues from that. Ms. Mens, if I can come back to you, you are, I guess, one of the implementation experts when it comes to, I guess, government programs. So one, I guess, model that has worked for Singapore in the last maybe 2 to 3 decades is what I guess they term the all of government approach in implementing, I guess, social and economic solutions. So for whatever social economic problem that they identify, there's a whole of government or all of government approach in finding solutions to these problems. So I guess looking at our developmental policies from the coordinated programs to the Ghana CARES program, what should be, I guess, government's implementation approach? And thankfully, I guess Mr. Arthur has given us from his private sector perspective, what would it take to implement such a wonderful program like the Ghana CARES program?
Thank you, Kofi. So for the Ghana CARES, we are adopting a public-private sector approach, and this is not a traditional public-private sector partnership that you are familiar with, but involving private sector participation in the implementation of this program. First of all, we know that the Ghana CARES is a 100 billion program. That's government vision, but out of that amount, 30% of it will come from the state. So there's a new initiative to mobilize additional resources to on top of what our medium-term fiscal money looks like, so that we can have the funding for it. So there'll be additional efforts on revenue mobilization to support that. But the other leg is the 70 billion that we expect the private sector will take advantage of the opportunities that we are offering through Ghana CARES in particular and generally across board to invest in this country. There are a lot of effort being made to engage and secure FDIs, increase FDIs in the country. But we are not just limiting ourselves to FDIs. We are looking at our local business people who have succeeded in various areas other than the areas that are critical to the economy. What do I mean by that? We have very good business people in Ghana, both local indigenous business people and foreigners who have done so well in certain specific sectors. We want to encourage them to go into agriculture, for instance. Why shouldn't we have some very successful Ghanaian businessman wanting to go into agri-production? So we want to encourage them to invest some of their resources into the areas that we've identified, adding value and pharmaceuticals, making sure that the basic pharmaceutical needs we do have. So it's going to be a partnership between government and private sector, because government alone cannot invest enough to generate the kind of economic activity that we require, to generate the kind of employment that we require. More so because there's a limit to how many people government can employ. We are almost at 30 million, and the census will reveal what our numbers really, hopefully in the next few months. And then we actually know. And how many can government employ? Less than 1 million. So where are all the others going? So if we do not have private sector investing and expanding and creating opportunities for our young people, and if you look at the number of young people who are coming out of the university, certainly we will have a crisis on our hands if we already do not have it. So we plan on partnering the private sector. We will engage and ensure that whatever bottleneck that currently exists, whatever regulations we need to reform, whatever institutional arrangements we need to put in place, we'll do so to ensure that private sector feel that the opportunities have been created for them to expand their businesses and move away from trade. Trade has become the in thing in this country. Every corner of this country, you find a table or a shop or some trading. And if you check, most of them are imported items. We want to encourage all the young people to not to wait and bring in items and wait to go to opportunities to go out there and bring in items, but look within and make sure that even the economic opportunities you are creating are sustainable and not trading as we are now seeming to do. So yes, if you look at our sectoral growth, the critical areas we are not going as well. We are going on the service sector, we are going in the financial sector. We are not going in production in terms of agric and industry. And we want to be deliberate about this through Ghana Cares. And we hope that the private sector will take advantage of the opportunity that we are offering. Thank you.
Great. Eben had, Arthur had that clearly, and I'm pretty sure he's going to mobilize his private sector colleagues to I guess, latch on to the program. But so again, innovative PPPs, partnerships that I guess ramp up local production, whether it's pharmaceuticals, agribusiness, agricultural production. I hear you make a strong case for that. And I guess you stated that 70 billion of the 100 billion cities will come from the private sector, and therefore looking towards, I guess, a lot more FDI and supporting local capacity to be developed to support the Ghana Cares program. Mr. Arthur, I'll come to you. And I think Ms. Mens made mention of regulatory reforms. I want to find out from you, because you sit in the private sector, but essentially what kind of incentive structure or what incentives does the private sector need to fully participate in the implementation of Ghana Cares? Are there any regulatory reforms that you would want to recommend or push for government to implement in the short to medium term to make sure that we bring the private sector to the table to help in the implementation of Ghana Cares?
Thank you. I think that there are quite a few that we need to do. Critical success factors for Ghana Cares program would be from, as we've already said, the private sector participation being very heavy. But I will add two things, which are the market building approach by regulators. And this means that if we are going to support and build new companies that are going to go into all these sectors, then we would need a lot of funding going to them. A lot of these funding usually is not going to come from the banks that we have. The banks may be able to help existing players scale up, especially if their cash flows make them creditworthy. But we are going to have to do a lot of venture capital. We are going to have to start new companies. And these are better suited for the private equity and venture capital industry, which in itself is emerging. So it will mean that organizations like SEC would have to collaborate with the Venture Capital Trust Fund to design appropriate regulations that will help the growth of this industry. I think certain industries have picked, they need certain type of regulation, whereas certain industries are now growing and they need more market building regulations. So there needs to be more sandboxing. It means we would have a lot of first-time fund managers. We will have to encourage people who have the experience to go into setting up funds, and we need to create a certain safe space for them to be able to grow and take the little capital we have here and use that to bring in extra capital from outside to invest in these new ventures that we are looking at. We would also need the MPRA to do its part. It's difficult for local fund managers who are trying to invest in local companies to go out there looking for capital or foreign direct investment into their funds when local asset owners or capital allocators have not invested in them. We have some considerable capital sitting with the pension funds, right? MPRA has done a great job. They've made some allocations for alternative investments, but alternative investment is so broad. So you still end up with a lot of it going to real estate. So we need to be very deliberate. We need to be able to earmark and ring-fence allocations at both the trustee and fund manager level for the private equity industry, which is going to drive the creation of a lot of these new businesses. At the RGD, we've had reforms on the Company Act, but the legal form that most funds are used to is still not existent, the limited liability partnership. So a lot of limited partners or institutional investors that come in looking to invest in funds find it a bit unfamiliar. And I think we need to address some of these structural nuisance for some of these institutional investors. From the GRA or the tax side, I think there are some incentives, but there is not enough education about it. So, for example, venture capital companies previously could have 0% tax for the 10-year life on the fund. It went to 1%, but not many people even know about this. It's not being communicated well, so it doesn't give capital allocators the confidence to know that, well, if I do invest in this incentive is there. So that regime needs to be looked at, and we need to really highlight the strengths, and where we are weak, we need to make sure that we are competitive with other markets. But bearing in mind that we are developing a new industry, so we need to give more incentives. One area where the incentives should go are the local corporates and the high net worth individuals. There is this conversation within the industry when you talk to some of the regulators, some of the actors, the high net worth individuals can get a tax break on whichever investment they make into SMEs or venture capital. But there's not enough clarity about it. We don't know if that is real, or it was some point in time, or it's still existing. And I think these need to be done boldly. They need to be very clear. And if this could be done, then it will encourage a lot of the high net worth individuals who may not be able to start businesses on their own because they are busy, to invest in other businesses because they know that it will give them certain tax breaks, and some of the risk is in a way mitigated. Not just them, but the local corporates. I'll just leave it here. I think there's a lot of regulatory work for major actors to do. And probably Bank of Ghana can look at allowing some of the banks to also work with the VC funds, either seeding them or co-investing with them. Thanks.
Okay. Thanks so much, Mr. Arthur. This is pretty clear. Some reforms in the Securities and Exchange Commission, as well as NPRA, I guess, to make sure that certain asset classes are freed up, that allows them to make investments in, I guess, startups. And again, you make a very strong case for venture capital investments. Again, I strongly agree with the last point that you made about creating an incentive structure for local corporates and high net worth individuals. And I guess the clarity on, I guess, the law that governs that may open them up to invest in productive sectors of the economy. Thanks again for that. Maybe the last question for Ms. Mint. Should the young people of this country be excited, I guess, about our growth prospects and where we're headed to? Is there any word of encouragement, I guess, for the teeming youth who may be unemployed, and I guess the opportunities we're creating for them under Ghana Cares?
Absolutely, Phoebe. I think that every young person in Ghana who is unemployed and has even basic education should be excited about the next few years, because opportunities are going to be created. In the last couple of months, I accompanied the Honorable Minister to Tamale, to Sunyani, and in Accra here, to engage with the young people of Ghana, some in the universities, some out of the universities. In fact, the major component of Ghana Cares is to address youth unemployment for our young people. And if you realize, most of the issues, commercial agri, modernizing agriculture, tech hubs, and agribusiness, are all targeted towards young people, because we want to create opportunities for them. We don't want a crisis on our hands. There are about 4 million Ghanaians who are either unemployed or are underemployed. I mean, it does us no good to have all our youth, a significant component of our youth coming out of the university, not employed. So yes, we are going to create opportunities. We are working with NEIP. We are working, we are working with churches to make sure that we provide skills for our young people. Everywhere we can find them, we want them to take opportunities of the skill training that we are providing. We want to create jobs. You are going to launch a number of interventions that would remove the issue of credit. My minister is obsessed with the issue of no credit, no credit for young people. So we are developing new products that would address specifically the issue of credit access to the youth. And I'm excited about some of the opportunities and instruments that Eben is talking about. I think we should have a chat after this, because really, any instrument that we can create to provide access to young people, whether it's access to credit or access to job opportunities, that's what we are all about. So yes, if you're a young person, you are listening to this, you signed up, get excited and get ready, get busy, get out of bed and get ready, because some opportunities are coming your way. And all you need to do is to take advantage of them. Thank you very much.
Great. Thanks for, I guess, those encouraging words. And it's been an exciting conversation with Ms. Eva Mens and Mr. Ebenezer Arthur. Thanks so much for making time to talk to us this afternoon. So ladies and gentlemen, today is day one of the SDGs Investment Fair, and we've been having a conversation around building back better through the Ghana Cares Obaatan program. Please do stick and stay with us. We're going to come to you once again with session 3 later today. Thank you so very much.